Good evening, everyone. Time for another silver update. You're looking at the 15-minute chart provided by netdania.com. You can click on the link below. As you can see in this chart pattern I've been pointing out on my blog for the last few days, that we seem to be rising in a stair-step pattern, and we have the trend lines fanning out to the upside. So a very bullish pattern. The MACD resets are very, very bullish because they're going down to new lows without the price dropping, and then we're rallying. So you can see we're coming down to a new low. Hopefully we get a new low reset on the MACD. We're just kind of rounding up, and we get another rally tonight. As I pointed out on my blog, the next technical steps are going to be 34 as a key resistance point, and we'll take a look at that on the daily. 34 is really key because of the congestion that exists around that price level, and then of course much of the support and resistance that is here of these lows that we drop down to. So we're still rising. We want to look at the weekly. I had some concern about the crossover of the MACD. When you cross over on the MACD, you always want to, let's take the freehand off so we can scroll in. When you cross over on the MACD, you really always want to decisively break through it. We don't have that sort of formation here. This formation back in late 2008, we had a rounding and then a break up through it. This one is a little bit more abrupt, and these tend to, in past experience I've noticed, these tend to turn down and then come back up. So it would be very nice to see a move up to 35 or even higher to 36 in the next couple of days to get a decisive break through this line, as we're just crossing over, and we don't want to see any reversals. So, but all in all, a very, very bullish day. We're up to 33 on the silver price, and you really can't ask for more. The stair-step type of thing is happening. We have this very interesting gap. I don't think it appears on anything but the 5-minute or the 1 minute. Actually, on the 5-minute, it's filled in. But when we look back on the 1 minute, we have this gap that occurred with the announcement by the Fed, and we're going to cover that, of the continued suppression of interest rates for the foreseeable, even unforeseeable future. So we went from about 32.22 roughly, and then we got 32.46, so 25 cents. And this was, you can see this was at 12:30. So this was a live trading time. This is not like a market open where you had the market closed and something traded and things changed overnight and the market wasn't alive when the news came. This is a live market, so this is a real gap. So most of the time, markets hate gaps. You can see they tried to fill that. The reason why gaps are anathema to market makers and traders is that there's a large number of orders that didn't get filled. If they were buy stops or sell stops that were limit stops, then they didn't get filled. Now, of course, if they were buy stops that were not limit, then they got filled at the next trading price, so they would have been filled here at 32.46. But the limit stops wouldn't have been filled, so it's highly in the interest of the floor traders and everyone else to try to bring the price back down to fill this gap. Even if they know we're going higher, they want to get those orders executed because they can make a quick profit. So it's going to be interesting. In a very, very strong market, you can see gap runaway type of situations. We may be looking at that. So as I mentioned, we had some very important news coming out. We had the Obama State of the Union speech, and we also had the Bernanke Fed announcement. So I wanted to cover those real quick. I've done some in-depth analysis of both of those statements, and I have taken the time to summarize them and basically distill both of those statements down to their core. And so we'll look at those real quick here. So I've got an audio here of the Bernanke speech, and we'll listen to that now. So that pretty much summarizes the Bernanke speech. Now the Obama speech was a little bit longer, so that's going to be a bit of a larger summary, so we'll listen to that too. So you get the point. There's really not a lot of point in examining what they said. It's the same old thing, the same old blah, 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 and the markets know the difference. The gold market as well had a tremendous spike. You can see gold is very, very strong. It also has that type of stair-step formation. It looks like it's pausing for a little breather here, but it may just go much, much higher from this point. So the news out today and yesterday is more of the same, and it is absolutely shocking that Bernanke would announce something that goes to the end of 2014. Here we are at the beginning of 2012, and he would make the statement that they plan to keep interest rates pegged at nearly zero for the next 3 years, for all of 2012, all of 2013, and most of the next year. So that's absolutely shocking. You would have to say, looking at the yield curve as I covered in last episode, that we are in a depression, if not a old style depression, then some kind of hyperinflationary depression. So I want to jump over to the blog real quick. Now I've gone ahead and pinned this survey that I put on there. I originally had it scrolling down and the news stories were going ahead of it, so it had been forced back to the back pages, but I've got it pinned now so that it stays up because it's so popular. People really like this, and so the news stories that come up on the blog are going to come up under this. So if you're looking for news stories to come up, you're going to have to scroll down below the survey because I've left that pinned. So it's very popular. People really like to see what others have stacked, and you can see when we look at the results that we've actually got a total of 1,151 votes, and I've set it to give the vote totals as well as the percentage breakdown. Now this is just from followers of my blog. I don't know if anyone's linked this link out so that others can participate. I don't know exactly who is participating in this poll, but you can see that the total is 1,151. Now you can see that the median is fairly well established. It's kind of a fat middle here of 154 at 2 to 500, 194 at 500 to 1,000, 199 at 1,000 to 2,000, and 186. So the heaviest weight's going to be right in here, and I'm not really sure how to calculate these 22 votes that were other. That was an option on the poll that I had. I don't know if these are people who've stacked more than 100,000 ounces. I don't know. You can see there's 53 people who say they've stacked more than 10,000 ounces. So it's hard to calculate these outliers here. I tried to make enough options for it to be accurate, but apparently I didn't. So be that as it may, it's already done, so I'm not going to redo it. I'll just let people try to figure out what that means. Now I'm going to try to find the median here, and I'm just going to do a guesstimate real quick and say that the median is, because we have a heavy end here, heavy tail on this end, I will go ahead and guesstimate that the median is 1,500 ounces. So whether that's the mean, whether that's the median, I'm just going to take that as an average and say 1,500 ounces. So we have 1,100 participants, and we have that 1,500 ounces we're going to go by. So we take 1,100 times 1,500, and we get 1.65 million ounces. So the people who voted on this poll have stacked 1.65 million ounces. Now, you know that we mine roughly 750 million ounces a year, but of that 750 million ounces, really only 150 million or so are investment ounces of silver. Roughly 500 or so is taken by industry and another couple hundred by jewelry. I don't know what the breakdown is, but we'll just use the round number of 150 million. And that's very interesting because that shows you that just the people who've taken this poll have stacked more than 1% of the investment silver that's produced every year in the world. So kind of an interesting fact there. Now I wanted to take you over to APMEX, and of course I always look for the deals that are out there. Now, as you know, I am very into numismatic potential plays, so I'm always looking for coins preferably coming out of the top 3 or 4 government mints, specifically Perth, the RCM, United States, and maybe Europe, a couple of the European ones there. So always looking for those potential numismatic plays because I like that double pop, the pop that you have with silver, plus you have the pop potentially with the rare silver coins. But I wanted to take you to the generic bags here, and that's something I always go back to. I actually have quite a number of the generic coins. This is going to be the US junk silver that is going to be the coins minted from the early 1800s or so, late 1700s. The nickel, now there are silver nickels. There are 3 years in the war years. I believe it's, correct me if I'm wrong, 42, 43, and 45 on the nickel were 42. Let's see, I got that wrong. Well, it's one of those years, 42 through 45 were war nickels, and they actually made them on a percentage of silver. Then you have the dimes that go back, and of course the quarters, the half dollars, and the dollar, silver dollars. Now in these generic bags, you're not going to get silver dollars, and you probably won't see too many half dollars. You'll probably see mostly quarters and dimes. But you can also go to APMEX or some of the other dealers, but APMEX, of course, is the biggest. You can also get coins by the bag. Now these coins by the bag are going to have a much higher premium on them. So you probably, if you're just interested in stacking the junk silver, you'd probably just want to go with the straight 90% generic bag. So you can see here, you get roughly 715 ounces in a 1,000 face bag. That's going for $23,909. So we're talking about 23,909 divided by 715. So we're looking at about 33, 43 an ounce, very, very close to spot. So you can still pick up silver in these bags, these junk bags, very, very close to spot. APMEX seems to have quite a few left, but I don't know how much longer that's going to last. And that was the next thing I wanted to talk about, is this issue. And I tried to do my research here, but I had to give up because I'm usually pretty good at Googling, searching things, but I was just simply defeated on this one. So if any of you have these figures out there, I'd really be interested in seeing them. I'd like to know how much junk silver was minted. and I've gone through too many sites and I've just burned out on that. But I didn't want to compile them from every single issue, all the Morgans, all the Peace dollars, and etc. But so if anyone has those figures, I'd be really interested in them because I'm very curious. My speculation is this: I think that at some point this junk silver is going to run out and it's just going to be not obtainable. There's two reasons I say that. The first reason is that for those of you that are around in 1979 and 1980 and 1978 when silver was spiking very high, I think the inflation adjusted price today would be 250. There were a lot of people taking these coins in and turning them in, and they were getting melted down. So I don't know what the percentage is that actually disappeared that went into bars that was junk silver, but I suspect that it's a pretty high number. Now, even today, if you go to your local coin dealer, and I have some coin dealers that I talk to, you'll find that if you talk to them, most of the junk that gets turned into them, they don't try to resell that junk. They just simply pile it up in great big bags and send it in to the smelters. They melt it down and create bars out of it. So these silver coins have been for the last 40 or 50 years have been continually melted down. And there's a limited number of these junk silver coins that were minted. So every year as we go along, there are less and less of these coins in existence. Now, of course, they're going to turn over as the price goes higher. But my conjecture here is that at some point, junk silver will actually not be available at all. I don't know what that point will be, but I think that that point is going to happen at some point in the future. So it's always a good investment to buy some junk silver. It's also something that people recommend for bartering because you have silver as small as a dime and a quarter. And if you're one of those hit the fan scenario people and you think we're going into some kind of catastrophic monetary collapse, silver, just a plain old silver dime and a plain old silver quarter pre-1964 would be something that would be really valuable for bartering, specifically because there's no reason that anyone would counterfeit those coins, and you simply can't counterfeit them. They have the standard serrated edge, and they're worn, and they have a lot of features that make them very, very difficult for a counterfeiter, very unprofitable for a counterfeiter. So there are a lot of appealing aspects to the junk silver, and I would never put that down. So I highly recommend that you stack a percentage of junk silver in your stack. Even though I spent a lot of time covering the numismatics and other things, I really like the junk silver, and I just can't say enough about that. So back to the chart. We are very, very strong right now. It appears that the powers that be have pretty much determined that they're going to continue printing money at whatever pace is necessary. This bottom, or these bottoms that we have here in silver, this is actually a very unusual formation to see in any chart, but even though it may be unprecedented, it actually could be very significant. It almost looks like a triple bottom when we come back to this price point here. So it would not surprise me at all if we just simply continued to move in an exponential move, something like this, and went very rapidly up through $50 an ounce. And hopefully you've been stacking at these low prices, because when it gets up there, you're not going to be able to get nearly as much silver. And we'll talk to you next time.